Okay, the PPI have just released yesterday and the data show that there is a slowdown in the US inflation. And we are going to see in today that the CPI is going to be released when the US market is open. And well, what will happen to the market? What will happen to gold? What will happen to the XY or the dollar index? Well, guys, before we go to chart, as usual, I'm Alex here, technical analyst from FundYourFX, and let's go straight to the chart. My apologize if I sound a bit weird today because I'm not feeling quite well. I'm not feeling 100% today because last couple of days, the weather is not that great in my place. Well, once again, I apologize if I sound a bit weird. Well, let's go straight to the chart, and the first one is let's talk about the macro data. Macro data, today there will be ECB interest rate decision, but we are going to skip here because we are going to shift our focus to the US side. The US side, we have the core CPI month on month, CPI year on year, CPI month on month, and we are going to see initial jobless claim. For the core CPI, we are going to see that the price is unchanged. I mean, the data is unchanged from previous, which is 0.3. For CPI year on year, we are going to see an increase of 0.2% from previous. And for CPI month on month, we are going to see an increase of 0.1%. If we see here, before we go here, wait, let me delete this first. Let's check out the DXY. The plan for DXY I have shown right here is before the price, before the CPI is going to be released, before the initial jobs claim is going to be released, the price is going to catch its supply zone, which is at around 98.480 until 98.4014. I repeat it again, 98.480 until 98.014. That is the potential rejection on the supply zone, on the DXY, on the forward chart. And we are going to see that before the US market open, there is high likely that the price will continue its bullish momentum and make a rejection when the CPI is going to be released. By that mean is, well, the CPI is going to come lower than the consensus. And we are going to see that inflation on the US is going to come lower than the consensus for the CPI. And the initial jobless claim is also going to be lower than the consensus. Okay, of course, the price action will discount everything. We are seeing right here on the chart is the leading indicator, so that the chart tells so. And then the CPI data, the macro data, it's going to be followed. So the CPI data is going to come lower than the consensus for today. So the DXY is going to continue lower to continue its bearish momentum. And we have another setup on the dollar Swiss franc. Dollar Swiss franc, it have very similar structure like on the DXY, and of course same method here. The price will move to the supply zone and then on the demand, I mean on the CPI zone, on the CPI and news data release, the data, the market, the price on the dollar Swiss franc, it's going to continue its bearish momentum. And if you want to trade the dollar Swiss franc for the 30-minute time frame, you want to wait for the trend alignment as usual, because right here the price still makes the bullish momentum or bullish structure. You really want to wait for the price to align on the structure side, like in the forward chart, so that you can get better entries, better risk to reward ratio, and you can skip the false signal that may happen on the US Swiss franc or dollar Swiss franc. So that's it for the trade ideas on the dollar Swiss franc. Let's go to the gold. Let's see what will happen to gold. Gold right here, there is tendency that the price will come higher because we see that the price make rally-based rally formation. This is rally-based rally formation. And we see that there is a strength on the still have plenty of sufficient bullish momentum on the forward chart, we're going to see that the gold will likely to continue its bullish momentum. But if the gold is failed to continue its bullish momentum, we are seeing right here, we have demand that the gold should be picked up right here as it will stop. Okay, it's came at around 3600 until 3576. That is the potential rejection or potential pullback target for the gold on the forward chart. Well guys, that's pretty much it. So the plan for today is to wait for the CPI data. If you want to trade on DXY base or cross pair or direct pair based on the DXY, based on the dollar index, the setup is to the DXY itself to continue its bearish momentum, and then after that the gold will likely to continue its bullish momentum, the DXY going to continue its bearish momentum, and the dollar Swiss franc or dollar franc, it's going to continue its bearish setup. So guys, thank you so much for watching. I hope you enjoyed today's video. I hope you learned something from this video, and don't forget to subscribe to our YouTube channel, and don't forget to share this video to your friend, like and comment as usual in this video, and don't forget to follow our TikTok, X and Instagram so you can get notified if I made this kind of video. Guys, thank you so much for watching, and I'll see you again in the next video. Bye bye.